Today's episode of Market Talk is brought to you by GrowMark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And a good afternoon. Welcome into Market Talk for this Tuesday, July 20th. Great to have you here for the show. I'm your host, Jesse Allen. Thanks for joining us as always. MarketTalkAg.com. That is our home on the web, MarketTalkAg.com. You can find us there, find all our social media, all of our streaming sources, and much more. It is all online. It's a one-stop shop, MarketTalkAg.com. Leave us a review if you're on Spotify, Apple Podcasts, iHeartRadio, Amazon, Google, whatever you're using. Leave us a review and make sure you subscribe to get the episodes each day. Well, a strong close today in the grain markets. Got a lot to discuss. Let's bring in our good friend Jim McCormick with agmarket.net joining us here today. Jim, good afternoon. And you and I were chatting a little bit before we went live here. Kind of an interesting close today. I was starting to think that it was going to be a weak close, well off the highs, and then that last half hour trade or so, we popped this market back higher, especially on the quartered soybean side.
No doubt about it, Jesse. The market, we surged in the morning, this hot, dry forecast the next week, 10 days, really got the market excited. The noon maps came out, and they weren't horrible, I don't think. There's not incredibly wet weather near term, but it seemed like when the market just couldn't get that surge of buying on the noon map, we kind of had an hour sell-off, and right about that last half hour, 45 minutes, the buyers came back in, and technically it was a good close, I believe. You closed over the 50-day on the December corn for the first time in a while, so technically that's a good sign. The bean market, it's been bouncing on that 50-day moving average as well for 3 or 4 days now. You go down and you feel like, is today the day we're going to take it out? It looked like it late in the day, and then we came back and closed strong. So I think technically you could argue it was definitely a decent close.
Well, and I think, everyone pretty much in agreement that Monday was just a risk-off day. All that pressure in the outside markets was the reason why we saw everything turn lower. So this was kind of the comeback here today on that on the weather. I mean, that forecast hot and dry and not getting any better in the northwestern corn belt, it seems. And we're kind of building that weather premium back into this market here ever so, steadily, it seems, Jim.
Yeah, no doubt about it. I mean, and one of the canaries in the coal mine, Jesse, yesterday was the fact that look at the corn market. I mean, the crude oil market down over $5. The economy definitely kind of shook a little bit due to this virus expanding, unfortunately. But the corn market pretty much closed unchanged on the day. And you got to wonder, what is that corn market? I think that, corn probably would have closed higher yesterday, except for the outside markets. And today we caught a bid. The reality is, folks, it is an east versus west battle right now, I believe. The Western Corn Belt's crop is definitely shrinking back. Talking to customers in parts of Iowa, the Dakotas, Minnesota, they're very concerned about this heat and dryness that's coming along. But I do have to tell you, I was in southern Indiana over the weekend visiting my folks in Seymour, Indiana, and the crops down there look phenomenal. I think Indiana, at least from what I saw along I-65 and talking to people, it is going to be a potential of a very big crop. So it's, how good of a crop in the east can offset the damage in the west, and time will tell. But right now, I think it's still up in the air.
Well, and you mentioned that northwestern belt, and I know, like you said, some worries in Iowa, Minnesota, the Dakotas. It's a totally different story, it seems, up there. And I've heard a lot of talk from producers up there, even last week at this time, that if they didn't see any sort of moisture in the next 7 to 10 days, that they were pretty much done with a lot of their crop. Is that what you're hearing from a lot of those growers in the northern plains?
That's what we're hearing. Interesting enough, I talked to a friend who's an adjuster for a crop adjuster here in northern Illinois. He's waiting for the phone call, decided they should send him up there to North Dakota right now to essentially start writing off the spring wheat crop, essentially letting them do what they're going to do with it. There's been no decision yet on the corn, but this crop, I think, is cannibalizing itself. This heat, the dryness the next 10 days, unfortunately, it's going to probably be the death nail on the crop there, and it's going to be another year of crop insurance payments for the North Dakota. And like I said, now the real question is, those poor yields, can they, as for the size of the crop, can the crop potential in Illinois, Indiana, maybe even parts of Iowa offset it? And like I said earlier, time will tell. But, the crop modeling that I've said, a lot of people put this yield somewhere between 174 to 178, 179. The fact of the matter is, at a 179 yield, Jesse. Government's arguing the carrot's going to be around 1.5. I disagree with that because the one thing they're not telling us is demand. The demand they're using for exports is about 300 million less year on year. That doesn't seem logical when you look at all the grain buying China's already done. But more importantly, the crop in Brazil got hit with another frost freeze this week. The government's at 93. A lot of private guys are sub 90 million metric ton. Some people are down to 85, and that was before this frost. So now you got a situation then going in Brazil, folks, that we just don't know how much grain's going to be exported. It's going to be a battle. The domestic people, where the crop's being hurt is in the South. They're actually importing over 20 cargoes of corn from Argentina. But the guys in the North, the exporters, that's how they make money. They want to ship it out. And it's a situation that we don't know what's going to happen. But we do know this. If that crop is below 90 million metric tons, that's about 400 million bushels of corn that normally be on the world market that's no longer there. And for the most part, by our calculations, there's only one country that can make up that shortfall, and that's the United States. And hence, that's the argument I give that why that demand is understated by 400 million. So if you raise that demand to 400 million, even with a trend yield of 179.5, which is 3 bushels better than the best crop we've ever had, your carryout, when it's all said and done, could still be closer to 1.1, just like it is this year. So going to be a lot of volatility and demand, talk this year.
Well, and you put all that into perspective, and it makes a guy like me think that, just judging by what we're seeing, that trend yield at 179, I don't see it out there just with the way everything is. So it makes me feel pretty bullish right now with this market, to where I feel like there has to be topside room in this corn market right now, Jim.
I agree with you, but I think here's what's going to be the struggle right now. I think in the near term, our group is arguing maybe we're kind of stuck in more of a sideways type of trade. I wouldn't be surprised as the $6 level kind of caps us at the high end of the range, and the $5 caps us at the low end of the range. We're just going to trade sideways simply because the problem I see, Jesse, is the customers in the Eastern Corn Belt. They thought they might have had 40, 50% of their crop sold. Maybe it's only 30 or 40 because the yields are so big there. So as the market gets up toward 575 to 6, the Eastern Corn Belt producers, I think, are going to want to step up and sell some 550, $5.75, $6 corn right out of the field. On the other hand, because of that tight carryout situation I was pointing out, if I'm an end user and I saw what the price of corn is trading at in July of this year, I got to believe if I can own corn down near 5 or sub 5, I got to buy as much as I can. So I agree with you. I think the upside's there, but the big problem is going to be is how quick will the government officially react to that demand that I anticipate is going to show up. Mind you, it took them forever to admit that the Chinese buying was at hand earlier this year. So that carryout number, I believe, will shrink, and I think it will get closer to 1.1, but that may not be to January. So I think there is a decent shot we'll take out these highs, but it may actually be Jan, Feb, March before the summer highs are taken out when we get a little bit better peek of what's going on in South America.
That's a great thought there behind that, and something to keep in perspective. I want to talk to you about the spring wheat crop. I know you touched on it a little bit, and that's a totally different animal right now. We're talking about some of the worst crop ratings since 1988 with that crop, closing in on that anyway. And I mean, it's both sides of the border. We know the problems in the Dakotas, in Montana, Idaho, and then into the Canadian prairies. I mean, this spring wheat crop, this is going to be I feel like this is a tight situation. Today, you and I were talking a little bit. It just seems like a lot of profit taking was maybe the culprit here today, because really, in my mind, there's no reason we should have been lower today with the way the conditions are and the weather forecast.
I agree. I think it was really more, you had a round of profit taking, folks, plain and simple. You can't go up every day. We saw some unwinding, I think, of the the KC, Minneapolis wheat spread today. Money's been taken off the board. But if you look at the price of wheat, Minneapolis, it looks expensive. But pull back and look at a monthly chart. We had highs in the 20s when it got squeezed years ago. With the crop this small, we could set ourselves up for a squeeze play. Not to mention, it's not just U.S. and Canada that's got problems. Now you're talking problems in Europe. Russia, the price of bread in Russia was officially raised here in the last 24 hours due to the price of wheat. So the supply of the wheat in the world is going to get tighter and tighter, and that should keep a bid on it. And as for the producers of Chicago wheat and Kansas City wheat, that should also support it, just because the overall supply of wheat will continue to tighten. I think, bases have weakened a little bit in some of those areas as harvest has progressed, but once harvest gets put away, I think that basis will firm up on the overall tight supply.
Well, and I know as well, kind of watching the markets too, we're seeing some more rumors of China buying some wheat, some soft red, and more wheat making its way into the feed bunk. And I would have to think that that's just going to continue to help tighten the global supply even more as we go through the rest of 2021, Jim.
No doubt about it. I mean, everyone's buying it. And the fact of the matter is, we still have food inflation. Everyone's talking about it. We know it's there. You're seeing it in a grocery store. You're seeing it at restaurants. And that's going to keep some spec money into the market as well, unfortunately. I mean, it's good for the producer and it's trying to sell it. But if you're an end user, it's only going to get expensive. That's why I believe, like I said, I think corn we could see a decent break into the fall, maybe the low fives. But I think if you're an end user, you need to step up and buy that break, or maybe sell some puts under the market, simply because the demand for the world product is very strong. China's hog herd is rebounding, so they've got to feed that. So overall, you got to be optimistic of the grains, I think, going into 2022.
Well, we touched on the soybean crop broadly at the top of the show, but I think overall there we know that that's already a tight supply. With the canola crop in trouble, that's going to put a lot of emphasis on soybean oil stocks here in the U.S. moving forward, it sounds like. And, looking at just soybeans in general, we're going to be entering that pod fill time here if very soon, if we haven't already in a few spots possibly. But again, it's the same story, east versus west, it seems, with soybeans, Jim.
I would agree it's a east versus west, but the one thing different about the beans compared to the corn, we're dealing with a dryness issue in the North Dakota and Minnesota, as we mentioned. But the problem in the east, folks, right now is what's been very good for the corn. This wet weather and kind of a great pollination. It wasn't a hot pollination here, but it is now a disease problem, is really reeling its ugly head. I've had several producers literally tell me that they've had agronomists going field to field saying, go ahead and spray this field, don't spray this field. It's not worth the economic input to go ahead and spray. The disease is so bad. Southern Indiana, as I mentioned, I was down there. If you're trying to aerial spray, some of that fungicide on, your wait days, a week, 10 days in line, trying to get lined up. They're hoping, they got a lot of heavy rain. They're trying to get equipment across the fields. They hoping by the end of the week. So the disease is an issue. And the bean market, like you said, is incredibly tight, folks. The government projected carryouts 155. Is that number? It's hard telling, but think about it. You plant 87, 88 million acres of beans, you lose a bushel, your carryout gets cut in half. There's zero room for air in the beans. And you look what new crop beans are compared to where the beans are this summer. If the market senses this crop yield is falling back, look out. Now, where that yield is going to be, in my opinion, Jesse, it's hard telling. Beans are made or broke in August, but if we have a hot, dry August, or essentially the pattern continues, hot, dry in the Northwest and too much rain in the Ohio River Valley, this bean market could be absolutely explosive going into the latter part of late summer.
Well, I think overall, Jim, with all the bullish tones we're talking about in all of these grain markets overall, it doesn't seem like there's a lot of bears in this market place or in the thought process at this point in time. But I think it just comes back to what we've been saying all year long about being smart, being disciplined, and not letting emotion rule your marketing right now. Having that smart plan seems to be the right play, and leaving yourself some top side options and leaving things open.
100% agree, Jesse. I mean, what we've encouraged producers right now, the volatility is driving people nuts. It's stressful. I mean, these dollar moves in the beans, 40, 50 cent moves in corn. I mean, when you figure the money you're making or losing on a day-to-day, it's hard to believe anybody gets any kind of sleep. So what do we recommend producers for you to do out there? Go back to the basics. And what I mean by go back to the basics, figure out your yield. A lot of guys have a pretty good handle. Do the math. See what kind of break evens you're looking at. And if you're making money, remember, that is the goal of what you do, is to make money. Lock in the profits. We've got the great tools of the Board of Trade. Lock in futures. Do HTAs with your elevator. Use the options for the upside. Like I said, I am friendly corn in the long run, folks. But I am a little bit hesitant near term that I think we could just be more of a sideways move. We're recommending straddle positions at our company. It's something to consider. There is risk to that position, so you got to be cautious. But that's a sideways. The beans, it's the same thing. We did remember, folks, also, Jesse, what happened yesterday. It may not be, we're all looking for the rain event to break the market. It may be something completely that we don't expect. I mean, the stock market had its worst day in months yesterday because of this variant that's getting worse. We don't know what's going to happen, but what if it really does get worse? What if it mutates again and it gets even more deadly, and then the market gets really nervous about it? Are we going to go to a lockdown? I have no idea what's going to happen. None of us do. But you know, one thing is you're profitable, folks, right now. So don't be afraid to lock in that profit. I mean, calls are going to be expensive, but you can afford to buy expensive calls with the kind of money you're locking in. That's our argument.
Well, and you hit the nail on the head there too. There's so many factors in our markets right now, Jim, that it doesn't have to be something like weather or a simple fundamental, so to speak. It could be an outside market issue or something else that could break these markets. So great advice there. Let's make sure we have time for livestock today. Hogs, I know more rumors of African swine fever, more cases. We heard about Germany late last week over the weekend. Now we're hearing China once again not getting a handle on this ASF issue, and that seems to be giving us some good strength in our markets here today.
100%. It's African swine flu fever, and I think it's kind of the cockroach fever theory. You know, when you hear one, there's probably more problems than what we're hearing, especially in China. Now the real concern, I think, is these big facilities, Jesse. You know, after the swine flu hit them a few years back, it took out a lot of the smaller producers, and they replaced them with these huge operations of, you know, thousands of sows on one floor, multiple levels. And I think the market is very leery that if you would get a major outbreak, you could really disrupt that situation. And that brought the speculators back in, thinking you never know, China may come in and buy. Food inflation is hot, not just in the United States, it's hot everywhere in the world. And I think China, people are very keen to see China come in and try to, you know, kind of tap down inflation whenever they can. So that's definitely a little bit supportive to the hog market.
Well, and I wonder, you know, looking at hogs, I mean, are we going to get back to the levels we were at? I mean, that, you know, talking some of those 120 levels close to that, mid one teens. I mean, I would say, I guess it's possible, but you look out to the October contract to past that. I mean, we're down towards the 80s and whatnot, 90s. I mean, I'd be interested to see if we actually put that much back into this market. I'm a little more hesitant on that, but I definitely think there is plenty of strength there, Jim.
100% agree with you. I mean, the fact of the matter is China's hog herd had rebounded quite a bit. Their demand has backed off a little bit. So, you know, when you're trying to figure out where we're going to be down the line, it's all going to be up to China. It's kind of like the weather here, folks, for the grain market. Good rains in August, the beans are going to probably flourish. If they continue to miss the rains or not. It's the same with China. If the hog herd down there really starts to contract because they've got to start eradicating through the AFS, you know, we don't know how much China's going to buy. We saw what happened a couple of years ago. Like I said, I believe they will try to keep food prices in check. So it's just something you need to kind of keep an eye on day to day, week to week, for sure.
Our cattle guys, you know, this market, it's kind of the ebb and flow against the grain market. If we have a down day in grains, we usually have an up day in cattle. If we have an up day in grains, we have that down day in cattle. It's been that way, a lot of volatility there. What are you seeing in cattle here as we work through the beginning part of this week?
Sideways range. Plain and simple at this point in time. The market's just kind of doing a little spread trading, buy cattle, sell hogs, buy cattle. They're just kind of to me, it's kind of, they definitely called the dog days of summer for a reason. We're doing that right now. The cattle market, you know, it's going to play a little bit of headlines on this variant and what potentially could or couldn't happen around the country. I think a little bit of nervousness when you saw LA, one of the biggest counties in the country. The fact of the matter is a lot of people eat beef out there in LA. And that kind of spooked people a little bit with with them doing a mask mandate. But I think the market, you got to keep an eye on that, you know, overall demand. But the fact of the matter is the overall supply, I think, is kind of getting under control, and it's going to just be more of a sideways move near term.
Jim, great insight as always. Any other final thoughts you have for us here, or anything else you want to reiterate to our listeners today?
The best thing I reiterate, folks, is, you know, when you're, like I said, give us a call. We'll love to help you. Go to our webpage, agmarket.net. We've got a great app that allow you to download, that you can download either on the Apple iTunes store or the Google store. That'll help you kind of figure out these break evens. Like I said, go back to the basics. You're making money. Develop a plan to lock in profits. The unknowns, they're hard to tell this year. I mean, you know, it's the black swan events that we can't think of. And you think about the prices they're offering today. Yes. Are they off the summer highs? No doubt about it. Are they better than you ever dreamt they could probably be a year ago at this time? Definitely. So, you know, build a marketing plan and even start debating on what you might do for 2022. 2022 could be a very interesting year. I know a lot of people are worried about input costs going up. You've got $5 DC22 corn. It's something to think about.
Lots of great advice as always. And again, you can find their information, agmarket.net. Download the app as well, agmarket.app. And if you need a little help, you can work with the guys like Jim at agmarket.net. Jim McCormick, appreciate the time as always, my friend. Thanks for joining us on this Tuesday. We'll talk to you again soon.
Thank you for having me.
Jim McCormick with agmarket.net, our guest today here on Market Talk, brought to you by Growmark FS. Find us online, markettalkag.com. This has been the Tuesday, July 20th edition of Market Talk. I'm Jesse Allen. Have a great afternoon.